Bring that ass back like a boom, 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 boom.
What's up, guys? This is Supernova Boom Traders, and I've talked in chat room a little bit more about exercising caution when you're trying to either short or play along the current market environment. And I'll try to keep this video as short as I can. Just go over some of the major indices and sectors of the S&P 500, see what's holding and what is not. And let me start by saying this: we are in a very peculiar situation due to a couple of uncertainties in the market, and if there is something that the market does not like, this is uncertainty. So first things first, we have inflation. Definitely the Feds are starting to recognize the fact that it's not just transitionary, and it's pretty much here to stay, or it will take longer and more rigid measures in order to keep it under control. Now, the second situation, Ukraine-Russia tensions. I'm not even going to go there. Just, just another uncertainty. Third thing, Fed rate hikes. And to top it off, we also have some minor issues in terms of some margins on some large hedge funds. So it's really, how to put it, as I said, it's a peculiar situation. So let's just not waste any more time. Let's just start talking about technicals and purely technical. So this is the chart of the S&P mini futures. This is a daily chart. I have a couple of lines on the chart, so let me just zoom in. White line, 10-day moving average, cyan line, 20-day moving average, yellow line, 50 yellow line, not wine. Yellow line, 50-day moving average, and this one purplish one is the 200-day moving average. Anything else I have is just volume, 20-day moving average on the volume. Now, the first thing that pops into my mind is carefulness. Why? This zone right here, and you can see this zone right here, this trend line has been touched a couple of times already. Where we are right now, we are approaching it. Now, could we break below it and just move down? Totally. Some people are calling this the mother of all head and shoulders, and you can look at some different versions of this. Twin Peaks, some call it. So here is your left shoulder, here is the head, here is the right shoulder. Could this fail? Yes. I didn't do my homework in terms of checking what's the statistical probability of head and shoulders working, but as you know, charting on charts is a bit science, a bit art, so you can view this different ways. Now, if we get out of this picture, and what I usually like to do is move up in terms of the time frames. Where's the weekly? Now the weekly is just below this 50 period, so that's 5 times, so that's 250 days. It's just below this moving average. It's a normal retracement. Let's just move more. Let's just move 10 years and see how we're doing. Not that terrible, you know. I mean, we are to some extent returning some of the gains we made, but it's not that terrible. And to show you what I mean, let's just move to the monthly. This is only the second month that we are doing negative. last time we had 2 months of negative action prior recent high was right here. We have a recent high, break of the all-time highs right here. We have 1 month, we have a second month. Now, the second month did not undercut the previous month low as it's happening right now. We're also, as I said, at a 2-month support. So, what do we do? Again, I emphasize that this is still not looking too bad. If we break below this, preferably fast break with a consecutive move back up to test this and move down, that's bad. But what I'm actually expecting, as we've seen, there's been a lot of consolidation on this level, so I'm expecting to see some more movement here. Again, it is the conviction that we're looking for to see. If this breaks, and we are really looking for, we're really looking at a head and shoulders, and this formation that we showed here, this being the left shoulder, this being the head, and this being the right shoulder, or twin peaks, this one and this one, this one and this one, we might be looking at 100% extension from here to here. So if we take this is, you know, the neckline as they call it, we might be looking at 100% extension from this high to this, which is about, let me just zoom in a little bit, which is about 13%. So we're looking at another 13% of 26 total. We're looking at levels right about here, which coincides with this level right here of support. Now, again, we are very close to support lines in order to short. So I'm asking you, please be careful. This can go very, very quickly, very ugly, but it can also rip higher, as we know they can do. And a lot of people that are shorting around this zone will get squeezed. So exercise caution and don't be hasty. Now let's move to NASDAQ. NASDAQ is in a bit more serious situation, but it's nothing major yet. Why? Yes, we are trading below the 200-day moving average. Yes, NASDAQ is probably the weakest of the four, speaking about IWM and Dow Jones Industrials. And yes, this looks negative, but again, on a longer time frame, and again I'll switch to the monthly, guys, we are not doing that bad. We still haven't seen an undercut of the previous month. And to also put this into consideration, the last time we did actually try to rally to this line, the Siam line, was right here in 2020. We closed above it. We closed above it on the next month as well. We haven't had a break since October 2018 of this line. So there's really nothing worrying going on except for the fact that we are pulling back. So on the longer term, we are right at the Siam line, and we have to be careful right now. We haven't seen a close, as I said, we are close to it, but this has proven to be a pretty tough place to be. If you look at the last couple of years, we've had a try here, we've had a break to it, bounce of it, pierced, close above it, pierced, open above it, pierced down, closed way above. Let's see how this one plays out. Again, looking at the daily, we are very close to the support line, and support line will come from connecting some trend lines. Now, if we are doing this one, you will see that we broken this long time ago. So the place that you could have been short is right around here. We gapped up, we closed above, we touched the moving averages, 10, 20, close to the 50, and we broke. This is a 3-point trend line. It's touching right, it started from here, here, touching here, trying to pierce it, no luck, tried to pierce it, no luck, rejected above, rejected on a lower high, move down. Could I short it right here? You probably could, because if you look carefully, this was the first close below this rising trend line support. This was the first close. Could you close it right here? Yes. Stop right here. You short it on the close, or you buy puts, or you do a call credit spread, whatever you want, put debit spread, you go down. Next day, look at what happens next day. Next day, you open here, try to go, next day, it's an update, you close right at this trend line. Next day you close, got rejected immediately, move down. And from here it's all she wrote, and it's gone. This is the place where you short. You don't short here. There is no break of these lows. And these lows are also, as you can see right here, let me just do a simple line. As you can see right here, these lows are also prior highs. So we broke below it. Let's see how we open on Monday. Oh, actually Tuesday, sorry. Let's see how we open on Tuesday. Let's see if we can break those lows, and hopefully we create some consolidation here that is playable. You don't want to play the fast move down without some prior support resistance zone where you can define a low risk entry. Now let's look at IWM. I'll just play this. Now, if you were about to short something, IWM looked like the obvious choice. Why? Well, because we have this rising channel. If you're not seeing what I'm talking about, let me just put my drawing to. If you're not seeing what I'm talking about, come on. Do we get some traction? Yes. If you're not seeing what I'm talking about, this is the rising channel. On Friday was the second day that IWM has been trading below this rising channel. Here it is, a rising channel. I'm not quite sure I drew it perfect, but it's close enough. Here is the first close below this rising channel on a move down. This is what you want on moves down. You have a move down, you have consolidation, preferably either sideways or a little bit up, and then you play on the break of this trend line. Now, where you put your stop loss, it's a little bit questionable, but I would argue that you can put it right around here. 207, 199. You could have shorted this close right here with that's 200 to 207. That is as tight as you can get it, about 3%, 3.5%. Not bad. You could have shorted it Thursday evening. I did not, because I'm a bit more concerned about the other indices. Now let's look at the Dow Jones. Sorry. Now Dow Jones of all looks the strongest, and we are again, as I said, in a very peculiar spot. We are near support. And if you look at weekly, you will see that we are trying to form a stage 3 top, might be moving to stage 4, but we still need to see some decisive action to the bottom. However, this area right here has proven to be support, so I'm expecting some back and forth, and eventually we might get some break. So you see we have one level here, we have a second level here, we have a third level here. So see, a lot of levels of support. Now we broke this one off of this low, we broke it, pierced it, but we were not able to close above it. So Dow Jones is still fine. Industrials. Now let me just go over very quickly over some sectors that I find interesting. SMH, this is the semiconductors, terrible. They look as they are ready to bottom. Again, we had a move down, we had some rising channel. You could have shorted that, and especially with the weakness in leading stocks like Nvidia and AMD, you could have shorted this, but stops are a bit too wide for me. Let's just check Nvidia very quickly. Nvidia, and well, this is left over for some other drawings, but anyway, it doesn't really matter. Nvidia is in terrible shape. We had double top rejected by the 50s twice. Now we are at the 200. We need to see some bounce here. If we don't, SMH, I bid you farewell. AMD, leading stock here, same thing, 200. So be careful with that. Now, in terms of the S&P 500 sectors, let's start with XLF, which is the financials. Financials are not doing too bad. They had like a head and shoulder formation as well. Last time we had some support on the 200, some support on the 200. Now we're seeing some consolidation around the 50. However, notice the lowering slope of the 250 line moving average is almost flat, the yellow line. Yellow line, gosh, it's almost flat. So this one, not the best. I wouldn't short it yet. We are close to support. You see, we have like 1 point close to support. And as far as shorts, it does need a lot of work. So nothing that we can do in this sector. Basic materials, they are trying to move up. And why I say that is, let's just go to the weekly. Look at what we find. So the weekly doesn't look that bad. We are making higher lows. This is important. This low was higher than this low. So this is important. These lows right here, they held perfect. You see this level, held perfect. Between that low and those lows, held perfect. Now we are below the 50 and we are trying to break. We couldn't. Past 4 weeks, we couldn't. We've been trying, couldn't break. But the highs are getting higher and higher with the exception of this week. However, even in this week, you see lows are getting higher. So this low is higher than this low. These are approximately the same and it's higher than this low. So not terrible. This is something that we might consider if we see a break above this line, which is like around 87. So we might be looking for some leaders in the basic materials ETFs. This might to be a low cheat, as Mark Minervini would call it. You see something like this happen as well right here in this basic formation. We had an undercut and rally top, same thing right here underneath the 200, gap over, tested, moved back, gap over, strong volume over the 50, tested again the 50 on a move down 2 days later, and we exploded. Same thing here, move down, base, gapped under the 50, move back on top of the 50. So you might be looking for some trades in the basic materials. XLU, next one, utilities. Boy, this is chop. Yeah, that's the only way I can say. It's under the 50 right now. It's sloping down. We see some support here around the previous lows. We are basically closing in the exact same places that we're open. As you can see, we open here, we close here, we open here, very small body, we open here, we close here. It's a zone of definite uncertainty here. So avoid for now. If we break those lows right here, look for some support around these lines. And if we draw, come on, yep, if we draw this trend line, we extend it to the right, so this might be your target. However, my only problem is that if you short right here on the break of this and you place your stop loss on the highs right here, you see that your risk, this is risk, you basically be like a 1 hour trade on both sides. So I have to be right like 50% of the time, which is not a good proposition for me. XLRE, real estate. Real estate is looking down. Well, there's no other way to put it, really. I was thinking that I might see some, some rotation here moving into XLRE, but XLRE just looks down. I wouldn't really bother with this right now. If it rallies a little bit, tries to, move off of the 10 and the 20, we might be able to short it, but for now this looks like pretty much nothing to do, because we have support like very close below like the lowest point of this zone, and I don't really see how this can be traded right now. I mean, it might go down, but there are chances when we hit this bottom up, we gap up. And if we test those zones and get rejected, we might be able to short it in a much better risk-reward situation. This is the energy sector. We're looking at the weekly now. I am probably the first one to say this, or maybe not, but this one looks toppy for me. On the daily, this one definitely looks toppy to me. Now, if we go on the weekly, you might argue that this is just another leg up, but let's just see if I can pull it up. Let me just. All right, so. Well, okay, this will work. It's not the one that I was thinking about, but this will work. Now, look at this, guys. This is the distance from the 10-week moving average, and the 10-week moving average is this white line. So every single time we've gone this high, last time we've gone this high, we had a reversion back to the mean. This time we are this high. I'm looking for a reversion back to the mean. In this case, the mean is the 50-period moving average on the weekly. You can see here we've had some more higher distance, well, larger distance is probably the best way to say it. A larger distance between a price action and the 10 moving average, and we've gone down. But every single time we hit this level, we are above this level, so we are seeing some move down to the mean. So I'll be careful with energy right now. So if anything, I'll be looking to, right now, I'll be looking to basically either short or just stay out of it right now. To be honest with you, I'll be doing my watch list either tomorrow or Monday, since the market is closed, and I'll be looking for some short trades in energy, but this can rapidly change, as I said, with the war in Ukraine and Russia. So we're not sure. We're not sure what's going on there, so we might be better off staying off energy for right now. The next one, XLY. This chart pretty much looks like the IWM chart. We had a move down, we had a rising flag up, so consumer discretionary is just a short to me. You could have waited. You could have waited until Friday to short, and Friday is probably not the best day to short anyway. We have some support right here from those two, and we have a lower support line right here. The only problem is that if you do actually trade it right now, let me just grab my line. If you just trade it right now, you are going into support, and this support zone has held multiple times, as you can see, once, twice, 3 times. It was pierced, not closed, tried to close below it, rejected on the next day, move up. So you are looking at a move of about $5, and your risk is about a bit more, so it's a no-go for me. But anyway, consumer discretionary just looks bad for now. Let's do healthcare, XLV. XLV is another sector that is looking toppy. However, we're still in support zone. So you either have this one, which is a trend line, and you can see that this held a couple of times. This candle right here is the current support that is still not broken, but in general, this area right here, it can provide support, so be careful. If this breaks, and this is a way more obvious head and shoulders formation, just give me a second. You see the left shoulder, the head, and you have maybe that works. The right shoulder. So you're looking for the neckline, and you're probably looking at 110 as a zone of possible place to go. And again, I'm not making those things up. It just happens to work. If you're looking at 110, this basically coincides with this support right here. So this is a zone that we can expect to get XLV. So XLV is a good place to. XLV is not in a good place to short, but it's a index that is setting up for some good shorts. And I'll be looking for some weak stocks in XLV in order to that have moved at least to consolidation here and are showing signs of weakness off of this consolidation to continue lower, so I can place some shorts on the XLV. XLC. Oh, communications. Communication. This is pretty much. I mean, it's just terrible. I don't know if I can actually say anything more than that. It just looks plain ugly. This is going down. Okay, well, there's some positives, like we are close to this zone of this candle right here, but if this doesn't hold, I think we're seeing levels of about 50 to 60, so still quite a lot to go, and there's really nothing that you can do right here. I mean, it's too extended on the downside to play it. Maybe if we get some push up to the moving averages, ideally to the 50, like we had right here. So we had some consolidation to the downside, we had some upwards channel, we broke up this channel to the upside, then rolled back over. Again, looking down for a move down and some consolidation either sideways or a little bit up, then you can short. But this one right here, just nothing that you can do, absolutely nothing. Industrials, XLY, they pretty much look like Dow Jones, just a little bit worse because Dow Jones was sloping with higher lows to the upside. These ones are sloping downwards. Good thing is we have support again and a lot of volume in this support. So you can expect some bounces around here, and once you get to the moving averages, especially the 20-day, as we see, has been a place where a lot of resistance has happened. We've only had like 2 closes that were rejected by gaps on the next day. So we had a close here, gap down through the 20, close lower. So you can place you can play this close for short with stop loss around here. Same thing right here, close above the 20, gap down, close below the 20, short here, stop loss on the high of this candle, and twice it could have worked so far. So this is definitely something that you can be expecting for next week. Communication, industrials, what didn't we do? Oh, technology, XOK, let's do technology. Oh boy. A sea of red. I see a lot of red lines, a sea of red right now. But again, as we spoke with the other sectors, we are close to the support lines. So you are not in a position to short, and you might be wanting some bounces. So I'm more looking for bounces in most places, because except for XLV and IWM, I'm looking for some bounces in order to short again. This is way too extended to the downside right now to be able to think about any shorting or whatsoever. So looking for some bounces next week. And as I said in the beginning of this video, it's a very peculiar situation. We are looking for some geopolitical events that can shape up how trading looks. And again, don't underestimate the power of the Feds. They can move the markets. So I hope this helps. I'll have more with the watch list for the weekend. But for now, it's I don't know, it's just cash. I'm just sitting in cash. I closed all my positions on Friday, not holding anything through this long weekend. So we'll see what we can come up with, and I'm sure something will set up. All right, guys. Well, thanks again. I hope this was helpful. If you have any questions or comments, please shoot me some lines in the chat. I'm there. And again, talk to you soon, guys. Bye-bye. Thank you.